Good morning, everybody. Hey, welcome to Monday, December 27th, the first Monday of this after Christmas season, and the last Monday of 2021 as we get ready to head into the new year. This will be the only day I'm with you this week, as taking off a few days, celebrating anniversary, and so with that. We've got Dave coming in just a sec, but before we do, let me just remind you that this time of year is a great time to get ready. If you're thinking about retiring in the next 3 to 5 years or sooner, it's a great time to make sure that your core retirement design is set up so that you can have the retirement you always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design visit. And with that, we've got Dave coming up next.
0.7 line. It's the last trading week of the year on Wall Street. Why? Because all of my newsletters are now popping up ads covering up the content saying, hey, give a gift this year, subscribe. Yeah. Assuming it'll stay clear long enough to figure out what the Sam Hill is going on, let's check and see what Wall Street is doing your money after a long weekend. We got Phillip Statler on the line from Statler Financial Services. Phillip, a belated Merry Christmas. Good to hear your voice this morning.
Hey, good morning to you. Merry Christmas as we head into this final week of 2021.
I was going to say, you've got a very conservative outlook, but if you're calling this the final year, I don't want to talk to you anymore. It's been an interesting year, but it looks like the Santa Claus rally just started a little bit late. I was looking at things on Thursday. Markets were closed on Friday. It looks like they'll do the same thing for New Year's Eve. But the Dow closed up 197 points. NASDAQ closed up by 131.5, and the S&P only up 29.25. But we're less than 20 points away from an all-time record on the Standard & Poor's 500. Looks like Santa Claus came, but it was just a kind of quiet rally as we came up close to Christmas, doesn't it?
Yeah, it really was, because we had those couple 3 days there where the market was tanking, and I think that took our attention and got us where we were kind of looking the other direction. So when it started creeping up, I don't think we really realized what was happening and how close we were getting back to the highs again.
Yeah, really. When you and I were talking on Thursday, our attitude, well, it wasn't bad, but it was, oh, well, here we go. So much for all the big gains this year. The market's all volatile, but when you look at the actual indexes, we aren't bad off. We're only going to be about 500 points away from an all-time record on the Dow at the opening. NASDAQ's got looks like about 1,500 to go, but that's still awful close to nosebleed territory given given the direction we were heading at the beginning of last week and the end of the week before. Things could be a whole heck of a lot worse to close the year out, couldn't they?
Oh, definitely could. Oh, no doubt. We could have continued those down days to the end of the year, and it would have definitely blown the Santa Claus rally for sure. But if we can keep this trend going, even if it's just slightly green until we get to the end of the year, and then everything kind of resets and we look at numbers of the fourth quarter, I think that's what's going to drive the markets really in 2022, at least that first quarter.
Now, they talk about momentum, and momentum counts for a lot. Talking about said momentum, pulled up some numbers for the holiday shopping season, and the preliminary numbers, and this doesn't count the rush for December 26th through the 1st of January, obviously, when they do a lot of business too, but holiday retail sales, excluding autos, up 8.5% year over year. Online sales rose 11% from a year ago. Apparel was up by like 29% over 2019, 47.3% over 2020. I mean, things are, we did not have a bad holiday shopping season at all, did we?
No, it really wasn't bad at all. I mean, I'm looking at this number for holiday sales, not over year, but compared to pre-pandemic levels. And I'm really impressed. They said the holiday sales were up almost 11%, better than the 2019 holiday sales. So, hey, you got to think that that's really some good news for our economy.
Oh, yeah, about the only fly that I can find in the ointment whatsoever is when you compare this year to 2019. In-store sales were only 2.4% ahead of 2019's holiday rush. It was 8.1% this year over last year, but 2.4% over 2019. E-commerce sales compared to 2019 up 61.4%. And if I ran a brick and mortar retailer, I'd be looking at those numbers and saying, okay, I'm happy with 2.5%, but boy, do I see a tiger in the jungle, huh?
Yeah, if I'm a brick and mortar, I got to start thinking, what am I going to do? Because based on those kind of numbers, you got to wonder how much brick and mortar is going to be left, and how much are they going to contribute to retail sales going forward.
Oh, absolutely. And you can see it in the national advertising campaigns. That big campaign for Walgreens where they're talking about somebody having trouble fighting with gift wrap and whatnot, and she goes, oh, son of a, and then Barb? Somebody at Walgreens that she's ordered from electronically just drives through and somebody's meeting her at the curb. I mean, even the stores that are almost requirements brick and mortar, like drugstores, are now talking about, okay, how can I get into this electronic stuff? They may have to drive to me, but by gosh, we're going to do it on a cell phone if we humanly can, right?
Exactly. It definitely seems to be the way of the future. And I think the pandemic has pushed us that direction even faster than we anticipated.
Without a doubt. Goldman Sachs had a report out over the weekend they put out. I'll just read it, looking ahead toward 2022. With labor demand red hot and enhanced unemployment benefits now expired, Goldman Sachs says they expect the unemployment rate during 2022 to return to the pre-pandemic 50-year low of 3.5% by the end of next year. But they still expect labor force participation to stay low. All those voluntary resignations and retirements are going to kind of put us under some pressure for labor force participation all the way through the year, according to those big guys.
Yeah, and that's, you and I both know that's not good, because we're both feeling it when we're trying to find new team players to come to the team and be a part.
Yeah, we need one. You need one. It's getting a little harder these days, because if you got a job, you're hanging on to it these days. Other headlines going out at the moment, the Consumer Electronics Show is a big holiday geek party out in California every year. It's supposed to start on Wednesday. Last year they did it virtually. This year they're going to do it in person, but we were kind of kicking it around before we went on the air. There's a lot of companies that are backing out for concerns with COVID. Remember, California is among the tighter states in terms of testing, vaccine passports and all of that stuff. Microsoft this morning announced that they were pulling out of the Consumer Electronics Show as well. I'm kind of wondering if anybody's going to be there, huh?
Yeah, that's when the big names start dropping out. You got to wonder how successful that's going to be as a show itself. Really, kind of highlighting what to expect over the coming years when it comes to technology. Flip gears just a minute here, Dave, because obviously we don't have any individual company stocks to talk about, but with all the COVID stuff kicking back up, airline stocks and cruise line stocks are getting beat up pretty big this morning. You got airlines down 1.5 to 1.8, almost 2%. And you've got cruise lines down anywhere from 1.5 to almost 2.5% down this morning. So as we continue to fight this Omicron variant, and some of that's not due to passenger levels, but it's due to staff. I know the airlines had to cancel flights because they didn't have the staff to run them, which is getting a little scary.
Yeah, the conventional wisdom that I was hearing on the network news over the weekend is, with all the ventilation and all the mask requirements on an airline, it's really not an unsafe place to be to get on a plane these days. Now the problem is the pilots are getting sick and they can't find people to fly the planes.
Well, yeah, that and just the other personnel, front desk personnel, the people to serve you your beverages, and across the board. Obviously, you got to have a pilot, but you got to have the other people too. And so I know several airlines went to the CDC to see if they could change some of the requirements for those that are vaccinated who got it. If they could just be out 5 days instead of 10, because that would make a big difference for them.
There's been a lot of relief on the staff numbers. You were mentioning the cruise lines, and we were talking before we went on the air. Of all my losers on the big loser list, all but one are either cruise lines or airlines. Carnival's down like 2.5%, Royal Caribbean down almost 2%, Norwegian down by over 1.5%, And that might partially be staff. That also is expectations, because the cruise line, unfortunately, to their detriment, was kind of the poster child for the breakout of the COVID pandemic when it first started a year ago.
Yep, that's true. I remember people getting stuck out there, and now, Dave, we got to start talking about not just a year ago, but we got to start about 2 years ago, because 2 years in March will be when it really hit here in the United States hard and heavy.
No, you're right. We are talking about the 2-year anniversary coming up in less than 90 days. That's kind of hard to swallow, isn't it?
It really is. And it's definitely changed our way of life, not just here in the United States, but across the world.
Absolutely. Resetting the table this morning, we've got some good momentum, good retail numbers from the holiday travel season, expectations for a decent economy during 2022, and accepting travel stocks that have their challenge. By and large, mostly good news as far as expectations for the economy. It was an up day on Thursday. We had 3 days off to digest all of this junk. 45 minutes before we open on the last week of the year. Where are we heading, Phillip?
At least right now, Dave, we are heading up when it comes to the indexes. The Dow is up about $83. That's not quite 1/4%. S&P 500's up about 17. That's about a little over 1/3%. And then we got the NASDAQ up about 74, not quite 0.5%. So things looking good on that front. Commodities front, not so good. We got silver trading down 1/4%. Still can't get over 23 again an ounce. Gold, though, down about 0.15%, and they did cross over that 1,800 mark to $1,809 an ounce. So finally,
that.
Yep,
that's kind of becoming a psychological barrier, isn't it?
It really is. When it's down below that, it's hard to boost back over it. We like to see it up over that number. Crude oil is heading down. Down 0.5% to $73.39 a barrel right now. I know we'd like it down lower than that, but at least it's heading down.
Absolutely. It's kind of in the neighborhood where it was when we talked on Thursday, though, if I recall. Overseas markets are a mixed bag pretty much across the board. They've got the same attitude we do. Don't know for sure what to expect. The Asian Rim mixed. Hong Kong was up by a tinge. Everybody else was down by an equal tinge. Over in Europe, I got some up, some down, just frittering either side of the zero mark this morning. Phillip, it's time to start talking about what to do in 2022 in an effort to try to stabilize your retirement and your tax planning. How do I find you to try to get a beat on where the risk is in my retirement?
Dave, it's really important that people kind of get an idea of what that is. When are they going to retire? What does that number look like for them? That's why we developed our core retirement design to help people really and truly design the retirement they always dreamed of. To do that, all they have to do is give us a call at 863-382-0037. And, they can join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM, Dave.
All righty, and back again after the new year, because you're going to take an extended weekend in here for the New Year's weekend. So I'm going to wish you a very blessed and a happy new year, and my greetings to everybody at Statler Financial Services with wishes for a happy new year.
Thanks, Dave. Yep, the office is open. I'm not going to be there the rest of the week, celebrating our 40th anniversary, taking a couple of days off, and ushering in the new year. And so I wish everybody out there a happy new year, and I will see you guys and talk to you again on Monday.
You didn't tell me that was why you were extending the week. Happy anniversary to both of you, Phillip.
Thank you.
Be well, my friend. Happy New Year. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.